Now to inflation, that economic weight that has bedeviled economies across the globe since the pandemic. Prices rose more slowly in January, with inflation at 3.1%, a big drop from the 9.1% peak in mid-2022 and down from 6.4% last January. But inflation measures the pace of price increases, not price levels, which have climbed 20% since January of 2020. Yet incomes have risen 22%, and consumer optimism is on the up, signaling economic resilience. Despite these positive signs, the stock market didn't appear to like the news. The three major indexes fell more than 1 percentage point each. The going theory is that investors guess the inflation news will further delay a Fed Reserve interest rate cut. Higher interest rates mean the businesses shareholders invest in may not be able to borrow and grow as much and as quickly as they'd like. For more, we're joined by CBS News contributor Javier David. He's managing editor for business and markets at Axios. Thanks for being with us. So how should we look at Wall Street's reaction to this inflation number today?
Yeah, this is data, and if we're keeping with the whole weather motif, it was hot, hot, hot. And this was an unequivocally, objectively bad, ugly number. Virtually every major component showed signs of going back up. Services, which has been particularly sticky, really kind of reared its head. Rent and shelter inflation, that is just continuing to climb up, up, up. These stronger than expected data is usually something that's welcomed by the market, but not in this context. Investors really want the Fed to start cutting. This sort of closes or forecloses on the idea that a rate cut will come in the first half of this year.
But the 3.1 was down from 3.4 in December. So
yes,
still going up, but not at the rate that it was before.
Indeed, indeed.
And I want to ask you about the Fed's point of view, because Chair Powell said something to Scott Pelley that I thought was really interesting. He said essentially the numbers don't even have to be as good as they have been leading up to the interview, which was recently. He said basically what needed to happen is that the numbers just needed to be kind of where they are for long enough. So I wonder why everybody's freaking out here at this when Powell has essentially said, as long as things stay where they are, and this number would be consistent with that, that a possible rate reduction would be possible. They just have to take the time.
Well, markets have been aggressively pricing in a Fed cut, and I think that markets have a bad habit of overreacting, and then they overcorrect to the overreaction. So what we're seeing, or what we've seen today in particular, is a market that had been, placing its eggs in the basket of the Fed cutting rates really aggressively within the first half of this year. It's not going to happen, and so at some point this week, probably the market will again sort of reassess and say, hey, we may have overdone it on the downside. But, I think that today's number, it's just 1 month, but it could be a blip or it could be the start of a trend. And if it's the start of a trend, I think the thing that people may not be countenancing is that there could be, the start of another rate tightening cycle. If it doesn't go down or if it starts going up again, then we have to start considering that as a possibility. But it is a very remote possibility.
And all Fed conversations have to include this 2% target that has long been the Fed's target for seeing inflation to get at 2%. So given what you just said, does it look like 2%, even if the Fed doesn't tighten, that's just a long way off?
It's a long way off, but we've said, and those of us that watch these things, this isn't a straight line. The path to 2% was always going to be kind of bumpy. I think the one thing that people need to absorb, as counterintuitive as it might seem, is consumers need to pull back. All of this is a reflection of demand that remains elevated. And that pushes up prices. And to the extent that consumers continue to want to spend, companies will continue to pass those prices along because they believe that consumers will continue to absorb them.
And you mentioned services that was sticky. Any other numbers, or why was that particular number within this inflation number? Anything else inside of it that you saw that was particularly notable to you?
Yeah, I mean, services has been a real problem in the pandemic era. Services is kind of defined loosely as, someone going to get a haircut or going to do something that doesn't involve sort of a physical good. And those service providers feel comfortable because they're paying more for whatever it is, the input costs. They can just pass it along. I think one of the more surprising developments is shelter costs, what it costs to rent, what it costs to own. Those costs just haven't gone anywhere. They just continue to climb almost relentlessly, and there's really no end in sight.
Javier David, managing editor for business and markets at Axios. Thanks so much.